Hey, what's up guys? John here. Argentina is now on fire. $1.3 million views. Take a look at just how crazy this situation is. Is it me, or does it seem like every other week there's one major disruption, one major catastrophe after the next? And unfortunately, these disasters seem to only be increasing in velocity. And what I think is ultimately going to happen here going forward is we're going to start to see banks, lending institutions, insurance companies, all of these actuaries take notice, and it's going to have a massive impact on the global economy. And I'm going to break it down for you, show you exactly what's happening and what you should be doing to position and prepare for this. Please hit the like button. YouTube's going to share this content to educate the people about what's really going on. And if you'd like to fix your credit to position yourself for the greatest wealth transfer of all time, which we're in right now. We're in it right now. It started in 2020, it's ramping up, and over the next couple of years, things are going to get absolutely crazy. You're going to want to be positioned with great credit, cash, and a game plan. That's what you're going to want. If you need help fixing your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. Click the link in the description below this video. One late payment will sit on your credit report for upwards of 7 years and can drop your credit score upwards of 180 points. Just one. So you can go from having great credit to bad credit over one little situation. So don't let that happen to you. Go to GreatCreditFast.com. We'd love to help you. We'd love to give you a free strategy session. Take a look at this. So Argentina, this situation is ramping up very, very quickly. Everyone's paying attention to what's going on right now. Images emerging from Gaza. Look at what's happening. Look at what's happening here. This situation, I believe, is only just starting. It's only just starting. And it would not surprise me to see this problem ramp up over the coming month, 2 months, 3 months, over the coming winter months here in America. And if you don't remember, Libya, this flooding, 4,000 confirmed dead, 10,000 missing in Libya. This was less than a month ago, less than 1 month ago. Then we had Hurricane Hillary up the Baja Coast of Mexico and Baja Coast, California, then up through California into Las Vegas. This was a multi-billion-dollar loss for insurance companies. Then you had the situation, Hawaii, another multi-billion-dollar situation, but many people lost their lives. In all these situations, many casualties, many. In Canada, for example, I mean, they're saying that it's going to burn all winter. Then you have this situation that's going on in Russia and Ukraine. You have all these situations, but what they're really saying, where this is all going to head, is food inflation is about to get out of control. So this came out a few weeks ago. It said majority of Americans say that climate is contributing to rising U.S. food prices and global food shortages. So if we look at what's going on right now, if you look at the food deal that was dissolved between Russia and Ukraine in the Black Sea, and you start to see what's going on right now in the Netherlands, all of the farms that are being taken off of the market, they're no longer going to be producing food. You look at all these situations happening in America with, look at California, for example. They produce a large percent of our fruits and vegetables, and their whole last season was destroyed by flooding and massive losses, fires, all these different disasters. All of this is going to do is push towards massive food inflation. And they're saying it's going to push towards food shortages. So they say currently 78% of Americans say rising food prices are making it harder for them to afford groceries, and 72% believe that it's climate. Well, I don't know if I would believe these numbers, 72% saying that, but the reality, what's going to happen? Food prices are going to be going up, and people are going to want to blame something. And I believe that over time they probably will blame this because, when you have a situation like what we're in right now with all these scenarios unfolding week after week after week, people already forgot about what happened in Libya. People already forgot about Hurricane Hillary. People are forgetting about all these different things because they're hit with so many different stories. And so when they look back on a chain of 100 different stories, they don't remember 95 of them. But what are they going to blame, right? It's going to be this. And so just get ready for this, because how this is going to impact Americans has not yet been felt. Some people will say it has. Trust me when I tell you it hasn't. Because property insurance, these actuaries, these insurance companies, these banks and lending institutions, what they're going to continue to do is hike up rates on property on cars, on everything that you need insurance for. Everything is going to get much more expensive. For example, new report says property insurance premiums will keep rising. They will, especially in coastal communities, areas that have high likelihoods of floods and fires. They're going to start to see a lot of increases. The premiums are going to continue to rise. And even if you're not in those areas, premiums will likely still continue to rise. And the reason for that is because they're going to continue to push their losses out across their entire policy portfolio. That's what's ultimately going to happen. So when you have a situation like, for example, vehicles, where the average car payment is $740 a month and gas is still continuing to rise, insurance is going to continue to rise, the job market's going to continue to likely soften, what are you going to have? You have a situation where a lot less cars are going to be on the road. A lot less people are going to be self-insuring these vehicles. And if they get into an accident, it's going to be their word versus the other driver, and hopefully the driver has insurance. When you look at what's going on right now, Federal Reserve Bank of Chicago, this kind of opened my eyes to a conversation that Glenn Kelman had, the CEO of Redfin. He had 2 years ago, saying that what's ultimately going to happen in the coming few years is that these actuaries, these banks, lending institutions, these insurance companies, they're going to stop lending and issuing policies in these areas of high risk, ultimately shrinking the pool of potential buyers for certain assets, which is ultimately going to depress prices. And I was looking at that, I'm like, that could happen. I could see it, because you're starting to see all these different other, high level people, people that have, that are making big decisions, all saying the same things. Then when you're looking at the Federal Reserve Bank of Chicago, they're saying March, they said, how climate shapes bank lending, evidence from portfolio reallocation. One document, I document how bank lending has changed in response to climate by analyzing changes in bank loan portfolios since 2012, using supervisory data providing loan level portfolios of large U.S. banks. I find that banks significantly reduced lending to areas more impacted by climate. Now, I haven't seen that. I don't think banks have done that, at least from what I'm seeing. People can easily buy a coastal property, but putting this conversation out there, if you have the financing, of course, and you have the financial ability to actually pay for the debt service on the property. But what's ultimately going to happen is this is going to start to become more normalized and more mainstream. And only the wealthy are going to be able to go buy in these high-risk areas and only be able to hold on to these properties and either self-insure them or pay the premiums. They go on to say, though, I estimate a standard deviation increase in climate risk reduces county level balances in banks' portfolios up by 4.7% between 2014 and 2020. In counties with large loan balances, the aggregate trend masks considerable heterogeneity. Banks reduce lending for more riskier loans, HELOC, CRA. This is the very interesting, fascinating situation that could very likely happen. Commercial real estate, the catastrophe that is likely coming. 1.5 trillion has to get refinanced next year. You have 2.7 trillion from now until 2027. All these loans, many of them, are going to step into financial hardship problems. And as banks start to, falter, default, they start, selling off these assets to large institutional players that want to buy these loans, they're going to blame it on bad underwriting. They didn't take into consideration all the risk that they see now in the market and the world. And what is this going to do? It's going to change lending. This is what we're looking at. So when you see all these stories, a lot of people are saying, John, this is about a lot more than money. And I agree, it is. So a lot more about money than money. But, this channel talks about personal finance and real estate and giving you information about what's actually happening that's going to impact your pocket, right? This is what's going to happen. We're going to start to see a real big affordability crisis across food, property insurance, and auto insurance. And people need to prepare for it right now. If you have credit card balances, you should really start to look at 0% APR balance transfer credit cards. There's a variety of them, 12, 13 of these cards right now that are offering 12 to 24 months, no interest. So if you are right now barely making it, you need to get out of credit card debt, and looking at a 0% APR card is a great way to do it. Just make sure you're going to be able to get approved for it. Don't apply for cards you're not going to get approved for. Look at the minimum for the credit score. Make sure you're far above the minimum, ideally above the maximum threshold, to ensure that the odds of approval are high. You don't want to apply for one card, get denied, apply for another, get denied, apply for another, because what ultimately happens is you become labeled as risky. You became labeled as desperate for credit, which hurts your credit score. So just be strategic and look at ways in which you can pivot and navigate these hard times. There's a lot of crazy things that are happening in the world. So just position yourself for more craziness, because I think it's coming. What do you think about this entire situation? Drop below. And if you need help fixing your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, book a free strategy session below by clicking the link at GreatCreditFast.com, and I'll see you in the next video.